Welcome to Commercial Property Deep Dive by Eureka Business Group. In each episode, we break down the essentials of managing commercial properties with expert advice and actionable tips. Let's dive right in.
All right, so today we're going to be deep diving into kind of a hot topic, attracting retail tenants and heartbeats. I think about this all the time from the perspective of a property owner. You've got this amazing space, like you got a great location. It's got all the potential in the world. But how do you get those leases signed? How do you make your location stand out from the crowd? Well, we found a great article called Free Rent, TI Budget, or Lower Rent. What's best for you as a retail center owner and why? And that's going to be our guide today. And this is all about giving you the information you need to make those smart choices for your property.
It really is, like having all the tools in your toolbox. But knowing which one to use and at what time is key.
Exactly. So let's start with the one that always makes everyone excited, free rent. I mean, who wouldn't want to skip a few rent checks, right? Especially if you're just starting out or trying to, expand your business.
Yeah, for tenants, free rent is a game changer.
Yeah.
Because it really impacts, their bottom line. For example, let's say you've got a, new bakery that's moving into your space. Offering them like 6 months free rent could be the difference between them, barely making it and actually thriving. They can use those savings, to invest in a new oven, maybe hire some extra staff. It gives them that breathing room they need to really get going.
Yeah, that makes total sense for the tenant. But I'm guessing some landlords out there are like, wait a minute, I need that income. So is giving away free rent always a smart move, from the property owner side?
Well, that's where the strategy comes in. You're right. You are going to be giving up some of that immediate income, but you got to think of it more like an investment. Because securing a really strong tenant for the long haul, that means you're going to have steady income for years to come, not to mention the boost to your property value.
So it's all about weighing those short-term costs against the potential long-term gains.
Exactly. And understanding the market in your area is so important. Like, what are the vacancy rates like? Are other landlords in the area offering free rent? What types of businesses are you trying to attract? These are all really important things to consider when deciding if free rent's the right way to go.
It sounds like it's definitely not one size fits all.
Not at all.
You really have to analyze your specific situation and think about your goals. Okay, let's talk about another incentive. Tenant improvement allowances, or TI. This is all about customization, right?
Yeah, it is. It's like you're giving your tenant a budget to kind of create their dream space. So that could include, upgrading the floors, the lighting, maybe building out some walls to meet their needs. Imagine like a clothing boutique that wants to install those, really nice custom shelves and dressing rooms. A TI allowance can make that happen.
I bet the tenants just love that. They get the space exactly how they want it. And when a tenant's happy, they probably want to stay longer, right? And for the landlord, those improvements could increase the property's value over time.
Oh, absolutely. And like you said, happier tenants, they tend to renew their leases, so you're reducing turnover. And you don't have to go through the hassle of finding a new tenant. And all those improvements that you've helped to fund, they can really make your property more attractive to future tenants. So you could potentially boost that market value.
So it's kind of a win-win situation.
Yeah.
But I'm sure there are some things to look out for, right? Like who pays for all these improvements?
Oh, for sure. TI allowances do require, careful planning and management. You've got to set a realistic budget and then make sure those improvements are really adding value to the property. And make sure that they're, aligning with the look and feel and the functionality of the building. You don't want to just end up with like a random mismatch of upgrades,
So having that vision and a good plan, that's key with TI.
Absolutely.
Okay. We've talked about enticing tenants with free stuff. And we talked about helping them create the perfect space. What about just lowering the rent?
Well, that is a very powerful tool, especially in a market where people are very price sensitive.
Yeah.
So think about like a newly developed area. That's trying to attract businesses. Lowering that rent can be a great way to get those first few tenants in. And then those tenants will attract other tenants and customers. It creates a ripple effect.
So it's like setting a lower price to get things moving and then build momentum. But lower rent obviously means less income per square foot. So how do you balance that with your financial goals?
Well, you've got to find that balance between occupancy and those rent levels. Think about it. Would you rather have an empty space making you no money, or a tenant paying a little less, but giving you consistent cash flow? Sometimes that lower rent can actually lead to higher profits over time.
So it's not just about squeezing every last dollar out of each space. It's about creating a property that's thriving and attractive, which brings in those businesses and those customers.
Exactly. And that brings us to a really important point that our source EBG Commercial Management highlights. And that's using a data-driven approach. So it's not about, just following the latest trends or doing what your neighbor is doing. It's about taking a step back and really analyzing the market and thinking about the characteristics of your property and, of course, your financial goals.
Okay, so data-driven approach, what kind of data are we talking about here?
So we're talking about going past those gut feelings and assumptions. You want to look at the hard numbers, like vacancy rates in the area, average rent prices for similar properties, the demographics of the people living in that area and their spending habits, even foot traffic patterns. By crunching those numbers, you can really get a deeper understanding of what's happening in the market.
So instead of just picking a number out of thin air, you're looking at the data to see what the market will actually support.
Exactly. And you can figure out what types of tenants you're likely to attract at different price points.
Yeah, this is giving me a lot to think about. I can see how this is so much more than just offering a discount or some free rent. It's really about the bigger picture and making choices that line up with your goals.
Absolutely. And that's just the beginning. We're going to be diving even deeper into these incentives in the next part of our deep dive.
Okay, great. I can't wait.
It's interesting when you think about it. These leasing incentives, they're not just about the money. They can really shape the whole relationship between the landlord and the tenant.
Oh, that's a good point. I hadn't really thought of it like that. What do you mean?
Well, let's think about it this way. If you're a landlord offering a ton of incentives up front, like free rent or a huge TI allowance, you might end up attracting tenants who are only interested in those short-term gains. And they might be more likely to leave once those benefits run out.
So they're not really in it for long haul.
Exactly. But if you focus on creating a lease agreement that's fair and sustainable, with reasonable rent and you're working together on improvements, you're more likely to attract those tenants who are invested in building a lasting relationship.
Yeah, that makes sense. If the tenant feels valued and respected, they're more likely to want to stay, even if the initial incentives weren't that exciting.
Okay.
It's like any relationship. It has to be built on mutual trust and benefit.
You got it. And that could be a huge win for both sides. Less turnover means fewer vacancies for you. And a stable environment lets the tenants focus on growing their business.
So it really is a win-win. I'm seeing now how choosing the right incentives is about more than just filling a space. It's about finding the right tenant, someone who shares your vision for the property and wants to see it succeed.
Exactly. And that brings us back to why careful planning and market analysis are so important. You need to understand your ideal tenant, what their needs are, what they value, what their long-term goals are. That's just as important as understanding the market conditions.
It's like finding the perfect puzzle piece.
Exactly. Now, before we go too far down that road, let's talk about the foundation of any good landlord-tenant relationship. The lease agreement.
Ah, yes, the lease agreement. The document that can either be your best friend or your worst nightmare. What are some key things that landlords should be thinking about when it comes to that lease agreement?
Well, the most important thing is clarity. The lease should very clearly outline the responsibilities of both the landlord and the tenant. It should be easy to understand and leave no room for, misinterpretations. Things like who's responsible for repairs and maintenance, or what's the procedure for renewing the lease, what happens if the tenant wants to sublet the space. All of those details need to be spelled out clearly so everyone's on the same page.
So it's all about anticipating those potential issues and addressing them right up front in the lease. Are there any specific clauses that landlords sometimes forget about?
One thing I always recommend is a clause about property alterations. This is especially important if you're giving TI allowances. You want to make sure that it's very clear who owns those improvements, who's responsible for maintaining them, and what happens to them if the tenant moves out.
Right, you don't want the tenant making changes that could hurt the property or scare off future tenants.
Exactly. Another important one is a clause that deals with default and remedies, like what happens if the tenant doesn't pay rent or violates the lease. That agreement needs to spell out exactly how you're going to handle that situation, including things like grace periods, late fees, or even eviction procedures.
So it's all about setting clear expectations from the beginning
Right.
and having a game plan if problems come up. Any other common mistakes you see landlords make?
One big one is using those generic one-size-fits-all lease templates. Those can be okay as a starting point, but it's really important to customize that lease to your specific property, to your market, and to the needs of your tenant.
So back to that idea of customization again. What works for one person might not work for another. Sounds like it might be a good idea to get some legal advice during this process.
Absolutely. Having a lawyer look over that lease can save you a lot of headaches down the road. They can make sure it's legally sound, protects your interests, and follows all the laws and regulations. It's a small price to pay for peace of mind.
I like that peace of mind. So we've been talking about the importance of the lease terms and how that relates to the incentives we talked about before. Can you explain a little more about how those two things kind of work together?
Sure. The length of the lease can be a really good bargaining chip when you're figuring out those incentives. For example, you might be willing to give a bigger TI allowance or more free rent. If the tenant agrees to a longer lease term, that encourages them to stay longer, which gives you more stability and makes it easier to plan.
So it's like a trade-off. The tenant gets a better financial deal, and the landlord gets the security of knowing the tenant will be there for a while.
Exactly.
What are some things landlords should consider when deciding on the lease term?
Well, it depends on what you're hoping to achieve and how much risk you're comfortable with. If you're looking for that steady income and you really believe in the tenant's business, you might want to go for a longer lease, like 5 or even 10 years.
But a shorter lease might be better if the market's changing quickly, or if you're not totally sure about the tenant's business yet. That gives you more flexibility.
Exactly. It's about finding that sweet spot between security and flexibility. And remember, the lease term is negotiable, just like anything else.
It sounds like communication and collaboration are really key here. It's not just about the landlord laying down the law. It's about working together to create an agreement that benefits both sides.
I agree.
Now, before we wrap up this part, I want to go back to something you mentioned earlier about tailoring the lease to the tenant's specific needs. Can you give an example of what that would look like?
Sure. Imagine you're leasing to a business that's seasonal, like an ice cream shop at the beach. They're going to have really busy times and really slow times. So you could adjust the lease to account for that. Maybe lower rent during the off-season or offer flexible payment options.
That's a great example. It shows that you're not just seeing the tenant as a number. You're taking the time to understand their business and finding ways to help them succeed.
Exactly. That kind of partnership can really build loyalty and create a positive relationship.
This deep dive has really changed the way I think about leases. It's not just about the legal stuff and protecting yourself. It's about laying the groundwork for a really great relationship.
I'm glad to hear that. And we've still got more to uncover. In the last part, we'll talk about some of the outside factors that can affect your leasing decisions, like the features of your property and what the neighborhood is like. Stay tuned.
All right, we are back for the final part of our deep dive on retail leasing incentives. We've talked about a lot. Free rent, TI allowances, those tricky lease agreements. And it seems like there's no one right answer. It's all about having a good strategy.
Absolutely. And as we wrap things up, I think it's important to kind of zoom out a little and think about those bigger factors that can really influence your decisions.
Okay, so what kind of factors are we talking about here?
Well, let's start with the actual property itself. Is it a brand new building with all the latest and greatest stuff? Or is it an older property with, maybe a little more character?
So are you saying that the age and the condition of the property can actually affect the type of incentives that you offer?
Oh, for sure. A brand new space. You might not need as many incentives to attract tenants. It kind of speaks for itself. But an older property, you might need to offer a bigger TI allowance to help the tenant modernize it and really make it stand out.
Okay, that makes sense. You're playing to your strengths and, addressing any weaknesses. But it's not just about the building itself, is it? The neighborhood, the surrounding community, that all plays a big role too.
Oh, location is everything. But it's more than just the address. It's about the whole vibe of the area. Is it a busy spot with lots of people walking around? Is there a strong sense of community? Is it an up-and-coming area with lots of potential?
Yeah, I see what you mean. All of that can affect the types of tenants that you're going to attract and what it will take to make them feel good about opening a business there.
Right. Let's say you've got a property in an area that's being redeveloped. It might take a little more effort to get those first few businesses in. Offering a better rent price or a bigger TI allowance might be what they need to take that chance.
So you're not just investing in the property, you're kind of investing in the potential of the whole neighborhood.
Yeah.
And those first few tenants can really get the ball rolling.
Exactly. Attract more businesses, more customers. It's all connected.
Okay, so thinking about those early tenants, it makes me think about the different types of businesses out there. How does the type of business affect your incentive strategy?
Well, different businesses have different needs and priorities. A big chain store, they're probably going to be more focused on being in a high-traffic area with lots of visibility, while a small local business, they might be more concerned about affordability and feeling supported by the community.
So you might offer different things to appeal to those different types of businesses, maybe a lower base rent for that big chain store, and a more flexible lease term or some help with marketing for that local shop.
Exactly. It's all about tailoring your approach to meet the needs of that specific tenant. It's about building a relationship.
This has been a great deep dive. I've really learned a lot about how to look beyond the surface. It's not just about filling an empty space. It's about understanding the market, the property, the tenant, the community, and finding that perfect fit where everybody wins.
Couldn't have said it better myself. And as we wrap up our look at retail leasing incentives, I want you to remember this. Every lease, every negotiation, every tenant relationship, it's a chance to create something great.
I love that. It's not just about the money. It's about building a community, supporting local businesses, and making our neighborhoods better.
Absolutely. So as you're working on those leases, remember to approach it with a sense of purpose, a commitment to creating value for yourself, for your tenants, and for the whole community.
Great advice. And to all of our listeners out there, thank you so much for joining us on this deep dive. We hope you learned a lot and feel ready to make smart choices for your properties.
Remember, the learning never stops. Stay curious, stay engaged, and we'll catch you on our next deep dive into the world of real estate.
Thanks for tuning in to Commercial Property Deep Dive by Eureka Business Group. We hope you enjoyed today's insights. Don't forget to subscribe for more expert tips and real stories to help you navigate the world of commercial property management. Until next time, keep thriving.